Hello, everyone, and welcome back to another week. And this is Sarah Mislowski with KeyPoint Homes Group. And today I have a really great special guest for you, John Burchfield with Capital City Home Loans. Welcome, John.
Hey, thanks for having me.
Yeah. And so if you are watching us tonight and you're a client of ours, you may already know John or have spoken to him. John is one of our really great preferred local lenders. And we're excited to have you on here tonight because, gosh, there has been a lot of movement in the real estate mortgage world. And
Yeah.
it's so great to have someone like you to get your insight and your expert opinion on, how to make sense of what is happening in the real estate market. But before we dive into business, John, I don't know if I share with you, but we got a new puppy at my house.
I've seen it. Yeah.
Okay. And I also shared on social media, if you follow me there, that we recently had our septic system replaced about 2 months ago.
Mm-hmm.
And we did not plan ahead very well. We should have ordered sod to be put down in the backyard to replace all the dirt and grass that they tore up, but we did not. So we've had very, very rainy weather here over the past month. So that with the Georgia red clay has not made for a good situation with having a new puppy. So I just wanted to, I'm going to share a picture with y'all. That's the puppy.
Oh my goodness.
Okay. And then that's our grass our winter rye that is not growing because of all the rain and all the seeds got spread around. So he discovered today that he can dig. And that was him.
Is that a dog or a pig?
Right. That's it does look like a little red piglet. So yeah, that was so some of y'all that are watching, you may not realize, but yeah, Georgia really does have that red of soil and clay, and that's what it looks like. And it's apparently really fun for dogs to dig in.
Yeah.
So
He had a good time.
Y'all have dogs, right?
Yeah. Yeah. We've got one, and then we've got a grand dog that comes to the house quite often to play. So got two around a good bit.
Yeah. Well, awesome. Well, thank y'all so much for joining us. Please let us know in the comments where you're watching us from. We love to know who we're talking to and where you're watching from. We've got people from all over the United States and sometimes from different countries. So that's always very, very exciting to hear from you, to learn where you're watching from. So, John, kick us off. What is happening with mortgages right now?
We've got a lot of exciting news in mortgages. The last 2 or 3 weeks, it's like the whole industry woke up from like a coma almost, because the months from like September through the first of the year were really quiet, and so everybody was kind of asking, what's going on? Where is everybody? Where's the market's going to go? And I think there was just a lot of confusion and apprehension with buyers and sellers, and now we seem to have kind of stable things, specifically in regards to interest rates and geopolitical events and things that have kind of gotten more stable. So people are more comfortable, and when they're more comfortable, they buy and sell houses. So business is up big time. Buyers are really coming after the deals that are on the market right now, and pretty aggressively. So it's exciting.
Yeah. And I am definitely feeling that in the clients that we're speaking to, that we're talking to, that have reached out with plans to buy this year, clients that we're currently working with, helping them find a home. But I'm also hearing a lot of that same information from a lot of other real estate agents that I talk to day in and day out, that their phones were quiet in November and December. And now it's just like, someone turned on a light switch and buyers are raising their hand and they're saying, yeah, let's go find a house.
Mm-hmm.
So it's really presenting a new opportunity for a lot of buyers right now in the market. So some of the questions I'm fielding, and maybe you might have the same thing, but I was just talking with a client yesterday who, we see all these headlines that say home prices are falling, the market is softening, and they said, gosh, I think I have the luxury of waiting a couple of months. I think I'm going to wait a couple of months before I buy a house, and I'm going to wait for those prices to come down even more. And so that's been a really unique conversation that I've been having, and I'm sure maybe you've probably been hearing some of that same thing too on your end as well.
Sure, all the time. That's what everybody wants to know, is now the right time, right? And I guess to some extent, nobody knows, but I can say that you know, where we were a few months ago and where we were now, and the statistics and the data that I look at seems to indicate that there's not going to be any depreciation of values in homes. I'm guessing you're seeing the same thing. The rate of which it appreciated in value will be slower, certainly, but there's still a lack of supply. There's still not enough homes for the amount of buyers that we have pre-qualified and ready to go out and purchase a home. And as long as that dynamic exists, then we're not going to see any price drops of any significance. What we do see, I guess you're seeing on your side, is that it's become more of a balanced market, which I love, because buyers can negotiate in good faith with sellers, right? I'm seeing contracts come across now with contingency dates, which is awesome.
Yeah.
And, they get a chance to have an inspection and find out what they're buying, so I feel like buyers have a lot of good things going for them right now that wasn't there a few months ago. And the reason it wasn't there a few months ago is because rates were so low, right? So if rates get better, we're likely going to enter that same type of bidding war. Sellers hold all the cards. Buyers can't negotiate for anything anytime. That situation might come back, which makes now a great time to pull the trigger and get this done.
Yeah. So I feel the exact same way. And, the conversation that I had with the client was, just like you said, right now we have a really unique opportunity and that the buyers still have a little bit of power here, right? So inventory is still kind of low, but although we've seen a surge in buyers over the past 2 weeks or 3 weeks or so, there's still not enough of them, I guess, to, completely, kind of change the tide of how things are going. So, we can get more leverage on your side right now as a buyer. We have the ability to negotiate closing cost, and we can negotiate the price, and we can talk about rate buy downs. And, we just have so much power right now. Whereas, if things continue along this path, which all indications are that we're going to continue to see interest rates kind of continuing to fall throughout the year, we're going to see a surge in more people as they become more comfortable with buying a house. And then the more buyers there are, and the less supply there is, that kind of creates that, scenario where we're having multiple offer situations again. And it also, a lot of this has to do too with what price point buyers are looking in. So, we all know in the metro Atlanta area, home prices have risen. So finding a good house under 350 it's challenging. It's doable. We can find it, but there's a lot of buyers in that pool of people looking for houses in that price point. So the faster that you can get a home under contract and get that locked up, the better. Just because there's so many more buyers in that price point.
Yeah, and now they can get the deal, right? They can negotiate in good faith with the seller who's willing to negotiate with them in good faith and reach an agreement that's fair for both parties. While their interest rate might not be where they had hoped, certainly not the interest rates that they've heard about over the last decade, but when interest rates get lower at some point, and we expect that, they can refinance, right? We've talked about that before. So they're not locked into that mortgage forever. They get the house while there's the opportunity to do so, and then we can renegotiate the mortgage later.
Definitely. So I did find this graphic talking about home price growth since January of 2019.
Yeah.
And, so the past 2 years, we had unprecedented, crazy year-over-year growth, especially here in the metro Atlanta area. And although this is taken into national account for home prices, this is very, very applicable to exactly what we saw here in the metro Atlanta area. 20% year-over-year growth in 2021 and 2022. And we're seeing that kind of normalize and get back down to a much more normal level, or getting more to a normal level. So normal is between 3.5%, 4.5% year-over-year appreciation. And as you can see, home prices are still appreciating, even though, even though you may see prices falling, really that's sellers that were pricing their homes still at 20% year-over-year appreciation.
Yeah, right. Yeah, I mean, it's important to, if somebody just glances at the graph, they might think, well, home prices are coming down, but that's not really what's happening. The level or the rate of appreciation is going down. And that's a good thing, because what we had for 2 years certainly wasn't sustainable. It was artificial, driven by, the Federal Reserve just driving interest rates to those low levels during the COVID era. So this is normal, and that's what we're back to, and it's a great time for buyers and sellers. Balanced markets are a good thing.
For sure. Yes, I definitely feel that way as well. And it's a much easier experience helping you and serving you and getting you under contract on a home. So we're happy that you're joining us here on this live stream. We have John Burchfield with Capital City Home Loans. He is one of my go-to preferred lenders that I work really, really closely with and trust ultimately with my clients. And so he's on today because we're talking about the housing market. We're talking about what's going on with interest rates. And we're here to answer your questions. So if you have any questions about making a move, getting a mortgage, different types of financing options, anything that you have a question on, go ahead and drop that in the comments and we will answer that here live as we go through and have this discussion. So John, we saw interest rates, they were at a high of 7.5% back in, what was it, September?
September, that was kind of the high point. And lasted for a few months. But yeah, if anybody was shopping for a home and getting pre-approved for a mortgage, they were probably pretty shocked by the numbers that were quoted for that 2 or 3 months where we saw anywhere from low sevens to mid sevens.
For sure. And this is a great graphic that just really highlights kind of the effect of how much impact a mortgage rate has on your ability to qualify for an actual home. So let's just look at that top line here at the graph. If, let's say, we often have this scenario happen where we talk with clients or buyers and they say, hey, I really want my monthly payment to stay around $2,600. I may be approved for more than that, but I really want to stay around $2,600. What is my purchase price? What does that need to be on a home in order to keep a rate or keep a payment around that? And I'll keep in mind this chart here is only taken into account principal and interest. So at a 7.5% interest rate, you're looking at a purchase price home loan amount of $380. But if we drop that interest rate down to 7%, then you can start looking at homes in the $400,000 price point. And now today we're looking at interest rates down between 6.25. Is that right, John?
Yeah, low sixes. Seen a day or two where it dipped into the high fives, so we're getting there.
Yeah,
so
yeah.
I love this graph because it exactly replicates what we've seen over the last 4 months, right?
Yeah.
The same buyer 4 months ago might have only qualified for mid to 300s, and now they're in the low 400s. I mean, that's a huge difference in the type of home they can buy for the same monthly payment.
Yeah, and especially here in our area that we serve, that also opens up more areas for you to look for homes. So, sometimes to find more affordable housing, you have to go to more rural areas and maybe a little bit further out than what you really want to be. But, swinging $50,000 in the other direction can open up a whole new area for you, put you closer to commute to work or wherever you like to go and shop and things like that. So this is also a great representation of why we are starting to see much more buyers out in the marketplace right now, is because the interest rates are down here in the low sixes. And so now those same buyers can afford a lot more house and they just have so many more options available to them. So
yeah, exactly.
Yeah, we have a great question here. It says, what do you see happening if the feds raise the rates again in February? So the feds are expected to meet soon, right? Is it this week or next week?
Yeah, February 4th, I think it is.
Okay, yeah, so that's next week.
February 2nd, I believe, is the day. So yeah, it's next week. And is it the 2nd or 9th? I'm not sure. I try not to keep up anymore. But I can tell you this. Yeah, they're going to raise rates. And the consensus is that they'll raise rates by 1/4 of a point. But what the home buying public needs to know is that they're raising the federal funds rate, which is what banks borrow money from other banks for overnight. It's an overnight lending rate. But it does trickle down to all other types of loans, including mortgages in some form or fashion. But what they're doing with raising rates is intentionally putting the brakes on the economy, right? They want to slow the economy down. They want to create more unemployment. As crazy as that sounds, that's kind of required to cool down an overheated economy so that it doesn't bust on us. And in doing so, that helps mortgage rates. Why? Because the fixed income securities the treasuries that are closely tied to how mortgage rates are priced become more attractive to investors. They're not going to put their money into Fortune 500 companies that may not earn the profits and dividends that they once expected, and instead they'll put them in mortgage-backed securities and treasury bills, and that drives down those yields, which in turn helps mortgage rates. So it becomes a supply and demand type equation with mortgage rates. So that was a lot of stuff to say that from here on out, I would expect that as the Fed moves interest rates higher, mortgage rates will get lower. We're going to see an inverse relationship between the two probably for the next 12 to 18 months.
And part of that also is that the mortgage industry has already kind of built in those drops or that effect that they already knew was going to be happening and planning for. And that's why we kind of saw that initial spike back in the fall. And now that we've adjusted, those future rate hikes have already been baked into kind of the current mortgage rates.
Months ago. That's right on. Yeah, everything's forward thinking. You know, we're making 30-year mortgages that will get delivered. If I fund a loan today, it doesn't end up in some type of security on Wall Street for 4 to 6 months. So we've got to try to predict what the demand and what the price would be for that security 4 to 6 months from now. So that's already baked in. We kind of know what they're going to do, and that's accounted for already in what we would expect.
Yeah. So if you're joining us live, thank you so much for being here. Make sure you drop your questions below about buying a home, financing a home, anything that you need to know or want to know. Go ahead and ask that, and we'll answer that here live. What are some of the financing options that you're seeing to be kind of like the most popular options for buyers right now?
Yeah. So the standard 30-year fix is becoming more popular than we've seen over the last 6 months because those interest rates have come down. But that being said, there's still a lot of strategies we can take to help a buyer's monthly payment. The most popular is just paying discount points to permanently buy down your interest rate. There's kind of a weird phenomenon going on with how mortgage rates are priced. You know, usually we would see one discount point only, and a discount point is just the fact of paying more closing costs to permanently buy down your interest rate. Kind of think of it like prepaying closing costs, or I'm sorry, prepaying your monthly interest. And we used to see that one discount point or 1% of your loan amount might reduce an interest rate an eighth of a point, a quarter of a point. And it's like, that's not really worth it. Why would I invest all that right now instead of just hang on to my money? But now we're seeing, in fact, we locked somebody in this morning, one discount point moved the interest rate down 0.5%. 0.5%. So the monthly savings is going to pay for their initial investment within just a little over a year. That was significant. And obviously the right thing to do for that buyer.
How much of and I know that every loan scenario is different based upon how much they're financing, but like in that scenario, can you give an idea of how much that discount point, like what impact that made on the buyer's monthly payment?
Yeah, I mean, just shooting from the hip, the discount point's 1% of the loan amount. In that scenario, it was about $4,000. It was a $400,000 loan. And I think it moved their payment down around $300 or so. So it was just over a year that they recouped that cost. So that's probably the most popular strategy in helping things out right now.
Yeah. So then your conversation that you're having with buyers whenever they're kind of like weighing the pros and cons of doing that discount point and buying down the interest rate would be like, hey, are you planning on staying in this house more than a year? Exactly. If you are, for sure, this is going to be a moneymaker strategy for you that's going to put money directly back into your pocket every single month.
Yeah. Or we roll the dice on the fact that interest rates come down to the point where refinancing that mortgage would be applicable to them. If that's the case, then why do we want to prepay interest when we may only be in the loan for 6 to 18 months anyway and refinance out of it? So that's one strategy. Another one that's super popular is going with an adjustable rate mortgage, something we didn't talk about for 12 years, but it's back and in a big way. Where we lock somebody's interest rate in for 7 years, sometimes 10 years. So they get a long time where they know exactly what to expect for an interest rate. But after that, it can start changing. The benefit, you can get a full percentage point lower in interest rate on some of these adjustable rate mortgages than you can on a fixed. So, for example, if the fixed rate was running 6.25%, we might be able to lock you in for 10 years at 5.25%.
Wow.
Again, if you think you can pay the loan off, if you think you might refinance because you really believe fixed rates will get better, or like most folks, I'll stay in the house 5 to 7 years and we'll do this all over again. In one of those equations, that type of savings is huge, and we want to take advantage of it.
Yeah. So prior to me getting into real estate and for us moving up here with my husband's job, we moved every 3 to 4 years. We knew that that was the plan and that was going to happen. And so we've actually had several adjustable rate mortgages just because we knew that, worst case scenario is that we were going to be forced to sell anyways.
Mm-hmm.
And then in a lot of those situations, we were able to refinance into a fixed rate that was a little bit lower. But yeah, it was a really great win-win, and it allowed us to save a lot of money.
Yeah, big time. It's a huge difference. So we certainly draw those scenarios out for buyers.
So if you're watching us, if you have any questions about moving to Georgia, buying a house, or how to finance a house purchase, let us know. We got John here with Capital City Home Loans, one of my go-to preferred lenders who takes great care of my clients. He's answering all the questions and all the things about what's going on with mortgage rates and loans right now in today's world. So another popular question that we get is, how much money do I need to put down on a house? And or do you have loan programs for a first-time home buyer?
Yeah. So down payment is the number one hurdle for people to buy their first home, right? People that got a home to sell and they've taken advantage of all that appreciation we illustrated a little bit ago, they're in great shape. But folks that aren't that are buying that first home, we got to talk about down payment. It's not as bad as, there's this huge misconception that I need 10 or 20% down to buy a home. Goodness gracious, no. I don't think anybody would buy their first home if that's what it took. 3% is kind of the standard. We want to get you 3%. You can do some government type loans like FHA with 3.5% down. 5% is ideal. I'll always talk about buyers on a long-term plan. If you can save up 5%, you're going to have more choices available to you. But we can get into a home with much less. To your question about first-time home buyers, yes, there are many, many grant programs available that are generated from nonprofit organizations that will help with that down payment for qualified buyers. We've got some that offer $7,500 in incentives, some that offer $10,000, some like $12,500 this year. So there's some great opportunities, and I want to encourage anybody listening: don't let a fear of I haven't saved up enough money keep you from dialing our number or someone's number and talking to a mortgage professional about what are your options, because there are options.
Yeah, we just had a client today. He was a VA buyer. So he had a VA loan available to him. He bought new construction. There was excellent new construction incentives that were available to him. So the VA loan was 100% financing. And this buyer is actually headed to the closing table tomorrow, and he is going to pick up a check to go back and deposit back into his checking account. All from purchasing a house, which is really crazy.
Very cool. USDA can act the same way, even for folks that aren't veterans. If you're moving into a rural area, USDA, you have the same folks that put the stamp on meat. They actually are in the mortgage business too, and that's 100% financing. Works very, very similar to a VA loan, and the buyer doesn't have to have any money in that deal. It's just the home itself has to be in an eligible area, which is just defined by what USDA would consider a rural area.
Yeah, and a lot of the great areas that we serve and talk about here on the channel are actually in some of these USDA areas that do qualify you for that 100% financing. And there are some income limits with qualifying for USDA loans. That's something to take into consideration. Tim here asked a really good question. How should one decide on a 15-year loan versus a 30-year loan where you pay extra each month to pay it off sooner?
That's a good question. I would personally look at where the spread is between the interest rate between a 30 and a 15 at the time we're locking in that rate. And I say that because it changes. Sometimes, and again, this is a supply and demand equation within the back rooms of how mortgages get sold and securitized on Wall Street. But sometimes the difference between a 30-year and a 15-year rate is only maybe 3/8 of a point, quarter of a point. In that scenario, I'm probably diving into a 30 and just pay an extra when you want and when you can, knowing you have a minimum payment to fall back on if life throws a curveball, right? But the 15-year loan can be a huge savings if we see that spread creep up into the half a point, 3/4 of a point. Then we're like, okay, let's take a look at this. Which, by the way, right now we're seeing huge demand for 15-year loans. So the rates are really aggressive. So they're becoming popular as a way to save money. Now, it's also about a macroeconomic financial plan for you and your family, right? We don't want to be paying off a mortgage if we're not investing in our employer-sponsored retirement plans, right? Tax-free. Sometimes they're matching it. IRAs. Do I have other debt that needs to be paid off before I focus on my mortgage? So we're going to have that conversation about, is this the right deal for you? You know, a lot of publicity and talking heads will say, you must do a 15-year loan. That's very, very smart. I agree. But there's a huge if. We got to look at everything else to make sure that you got all your buckets of money taken care of before we focus on how quickly can we pay down the mortgage.
Because one thing to consider is that whenever you're paying down your house faster, you're literally just taking more money and sinking it into the house. You don't really have, it's a little bit harder to access that equity if a situation were to occur where you had an opportunity to buy investment property or you needed some more savings for an emergency fund or something like that. I mean, it's literally tied up into your house unless you did a HELOC or something like that where you could access that money in the house. So that's definitely something to keep in mind. And I love the fact that you said of like making sure everything else is taken care of first, because those things are also going to have, such an immediate impact in your day-to-day life as well. And sometimes that money that you're maybe not putting into the house, you can put it in other areas where it might grow faster or give you more flexibility to do other things rather than tying it into your house. And I'm sure maybe that question might be a little bit different, or the answer might be a little bit different if it's someone that's maybe close to retirement age, or they have a short time period of knowing that they are going to retire in a few years and they have this goal of having a paid off house.
Yeah, it's all about that, right? Where you are in life, we want to talk about that, talk about long-term goals, how long we're going to be in the house, and get the right custom fit and mortgage for that particular buyer.
Yeah. This person asked, how much does PMI add to the monthly payment?
Wow, we have some smart listeners today. Yeah. I like it. So overall thought here is that you shouldn't be afraid of PMI and mortgage insurance. There was a day and time, I've been doing this for over 25 years, where PMI was outrageous. I mean, it was crazy. When you put it on somebody's monthly payment, it was just a deal killer.
And so for those that don't know, sorry to interrupt, it's private mortgage insurance, and you have to have that whenever you're putting down less than 20%.
That's right.
Okay.
That's right. And all it is it's just the lender sharing risk with an outside insurance company saying, hey, pay them a little bit of an insurance premium. So if you default on your mortgage, Mr. and Miss Homeowner, then we're only out a percentage of the loan, and the insurance company will come in and help us make back some of what we're out. And the premium for that used to be really, really expensive, but it's gotten much more favorable. But to specifically answer the question, it depends how much money you put down. At 3% down, the PMI rates are higher. 5%, a little lower, 10%, and so forth and so forth. But expect it in general on a 5% down loan, 0.3% of your loan amount annually. Right? So I've got my calculator sitting here, and I love numbers. $300,000 loan, 0.3%. You might be looking at $75 a month in PMI as part of your monthly payment.
And this is one thing that I learned. Correct me if I'm wrong. A buyer has an option of paying a one-time flat PMI fee rather than paying it monthly.
Yeah, we talk about that all the time. Yeah. Specifically when we in the industry, in the mortgage industry, we think in terms of percentages, 3% down, 5%, 10%. But buyers often think in terms of dollars amount. I have $50,000 down, right? Yeah. Well, if they're purchasing a $600,000 house, that's not quite 10%, but it's more than 5%. So how can I leverage the difference? I have that money available. one of the key ways or strategies we can do to make the home more affordable and the monthly payment more palatable is to pay all the mortgage insurance at one time. At closing, there's a lump sum fee there, and you pay it, and the mortgage insurance is gone forever. That is less dollars and cents than paying it monthly over time, because the mortgage insurance company is thinking, hey, I'd rather dollars now than dollars later, because you may sell that house, you may refinance that house, you may do any number of pay the loan off completely. I mean, who knows what may happen? So I'll take your money right now, and I'll take a little bit less because you're giving it to me right now. So that's something we often look at.
So on a conventional loan, when do you have the ability, let's say that you are including the PMI in your monthly payment, when do you have the ability to drop the PMI, or do you ever, or it's always on there until you refinance or until you sell?
On a conventional loan, absolutely. You can drop the PMI when you have paid the loan balance down to where you have the 20% equity in the home, right? Now, a lot of home buyers forget. I always mention this. If you just forget, because people get automatic bill pay and you move on with life and you forget about things, when you eventually pay the loan balance down to 78%, the lender will remove it for you. When you just pay it down to 80%, you've got to be active. You've got to call them and say, hey, I want to remove the PMI. They'll have an application process that you go through, and it'll be removed.
So home prices have really appreciated here in the metro Atlanta area and a lot of part of the country over the past 2 years. So if I bought a house a couple of years ago, maybe now I do have 20% equity because based on what it's worth.
Yes.
Can you elect to have an appraisal to show that, or does it have to be the actual loan balance to the original loan amount?
Yeah, a homeowner can call their loan servicer and again say, hey, my house is worth a lot more. I have 20% equity. What's the process of getting rid of the PMI? And they'll have an application process of which you can choose to have the home appraised. And if that appraisal comes back, the word caution I'll say for everyone is the servicer of the loan is going to pick the appraiser, and they might beat them up a little bit. They're going to look for very conservative approach to those appraised values, keeping in mind that property values go up and down over time, right? So when somebody put less than 5% down fairly recently, maybe just in the last 18 months or so, and now they have 20% equity, expect a little bit of a hard time is what I would say, because they're going to be thinking, well, what if the values on your home drops just a little bit, and now you don't have 20% equity, and now you're in a financial hardship, and we're exposed for more than 80% as the servicer of that loan. So certainly doable, absolutely something they should investigate by dialing up their servicer, just the 800 number on their monthly statement, and asking about that process.
Yeah, I'm glad I asked that because I need to do that personally. I feel like we would be a good candidate to drop our PMI.
Sure.
So if you didn't join us last week, I shared that we are going through a renovation at our house. So we've entirely gutted our top floor of our house. We have a ranch on a basement, so we're living in our basement right now. So this studio here is in a room in my basement. So the whole family's down here now. So when you hear the dogs barking, that's because they're like just outside that door, and we're one big cozy family down here. And cue up Hank right there the puppy to bark. So
I sympathize because we did that spring of 2020, lived in the basement for 4 months, I think.
Yeah.
And had it completely gutted upstairs. That's quite a process, but
it
totally
is. We're 1 month down. So, but it's exciting. We're making progress. So that's good. Yeah. We had another great question here. I've been with my bank for many years with multiple accounts and loans, always in good standing. Does that mean I would probably get the best mortgage rate through my bank, or should I shop around?
You've got to shop around. You got to shop around. Do not assume the too big to fail banks will have the best mortgage rate.
Or even like a local bank, right? So, some people have like really great relationships with their local banker. They've got business loans and all kinds of great stuff with them. And they think, I'm going to get a great deal because we have a good relationship and they know me.
I'm somebody. They know me when I walk in. And that's a good feeling. And they may very well want to do business with those folks just because of that relationship, right? But know that it may not be the best deal, right? Because just the way organizations are structured, the amount of mortgage volume they're able to push through is going to heavily affect their margins on those loans and how they have to price them to pay the people and the compliance that it takes to generate a mortgage, I'll tell you, mortgages, again, this is kind of backroom stuff, but the compliance to get a mortgage from, hey, the phone rings to securitized on Wall Street is complicated. And it takes a lot of people to pull that off, a lot of systems to pull that off. So it's expensive. And the folks that are the organizations that are very efficient at those systems are going to offer the better rate and the better price, typically. But .coms and what I call the too big to fail banks, shop.
So I often get clients that we talk to, and they're like, "Yes, I've already been pre-approved, and we're ready to go." And we'll ask them more questions, and we'll find out, not all the times, but sometimes, the place they've gotten pre-approved are from some of these really big national lenders that you see advertised on TV, Rocket Mortgage, places like that.
Yeah.
And as someone that's built up some trust with clients and people that watch, it's always my job to give you, straight, honest advice. And I always tell clients, like, please, I have some really, really great local people that you need to talk to. It's going to be, one, like, such a better experience for you as the consumer. And then two, 9 times out of 10, y'all can beat those rates and offer a much better scenario, or walk them through some other options that are going to, talk to them about the PMI and how they can save money, or how they can, allocate different funds in different areas to put them in a much better financial situations. And I can tell you, you're not going to get that great advice from some of these big, huge national lenders.
No, I mean, they're paying for Super Bowl commercials instead of paying mortgage professionals to guide you through the process. I mean, that's the bottom line of it, right? So because they try to make it easy. There's a too big to fail bank locally that says, push a button, get a mortgage. Oh my gosh, if it was that easy, right? It's not. It's a complicated, biggest investment you'll ever make in your life. Don't let a button make those decisions for you. You need an experienced counselor to walk through you with the process to make sure you're getting the right deal for you and you're getting a good deal. What I would tell your listeners is, hey, if you've already worked with somebody else for a pre-approval, I love those phone calls, right? I mean, within a 3-minute phone call, I'm going to be able to see, okay, what have you been talking about? What kind of numbers are they quoting you? And I can give you some good advice on how to either continue to work with that lender, if that's what you want to do, or we can illustrate how we might be able to do it better. But either way, it's going to be a win for you.
Yeah, and that's one of the reasons that I love working with you, John, is that when we get to compare apples to apples, there's been many scenarios where you've looked at another lender quote. Sometimes it's through a new construction opportunity where they're offering some really great incentives, where you've been able to look at that and you're like, wow, this is a really great deal. They're offering some things that, we just can't touch. And yes, you should go for this. Mm-hmm. And you've turned away business from clients or potential business because it was in the best interest of the actual buyer and it was putting them in a much better financial situation. And I think that that's, such a good thing. And it's why we continue to work together, because I want the best for buyers and the best experience and put them in the best financial situation that we can.
Yeah, I appreciate you saying that. I love my job. I think I got the best job in the world. I tell people that all the time. But one of the things that we have to constantly remind ourselves here, and it's kind of a mission statement that we live by, is that we don't do mortgages. We serve people. So we feel we take our role of just serving the best interests of every time the phone rings, whoever that is, whatever they need. How can I serve them today? And as long as we have that mindset, the paychecks will take care of themselves, right? The loans will close on their own. We'll have our fair share of that. So it's something we take pretty seriously around here.
Yeah, there's more good questions. Tim has a question: is there a maximum income cap on qualifying for a USDA mortgage or other 0% down mortgages?
Sure is. Yep. Now with USDA, it's pretty aggressive. It's in the 6 figures. It depends on how many people are in your household. There's some deductions that they allow to be taken from your gross income to fit underneath those income caps. So it's very much specific to each individual buyer, but it's in the 6-figure range for our Atlanta metro area, or at least it's really not Atlanta metro, it's outside the Atlanta metro, the USDA eligible home. The other 0 down mortgages, VA, there's no income caps, right? And then when I I spoke of that do require technically a 3.5% down payment, but we partner with a nonprofit to provide a grant to help with that down payment. Those grant organizations will have income caps, and they're going to be much more aggressive than USDA. For a single person by themselves, you're in the $40,000, $50,000 a year bracket household income. So even if only one partner's on the mortgage, but it's a married dual income family, both incomes have to be considered if they bust out of the income brackets. And the reason for that is there's a limited amount of funding that these nonprofits have, and their charter makes certain that they allocate those funds to the people who need it most. So there is going to be some income caps that we take into consideration.
I think one of the unique things that we can do and help clients with, and you mentioned this, you said don't let kind of like the availability of funds stop someone from making that phone call and having the conversation with a loan professional, and have that conversation with you. We recently had a client that we worked together on that they had a limited amount of funds for down payment. They had the qualification to qualify for the loan, but their down payment, what we had available for down payment and closing costs was very limited. And so you looked at the scenario and you called me up and you said, okay, Sarah, we can get them approved for this amount. They can buy this price point of home, but we have to have the seller pay $10,000 in closing cost. That's a must in order for, this to work out for this buyer. And so that was a scenario where it worked out for the buyer. We were able to get that. And this is why it's important that, if you're a buyer that even possibly falls into that category and you have the ability to buy a home now versus later, this is why this market right now, this environment that we're in, is prime for you to be able to put yourself in a position to do that. But once we get into the spring selling season and interest rates come down a little bit more and more buyers come out, the sellers are going to be back in that position where they can say, yeah, I don't have to give you $10,000 to sell my house. Here's another offer, and they're willing to pay me full price. So, that's definitely something that's important to have that conversation with the lender, and let's figure out what is the scenario that we can make work for you and what do we have to get negotiated for you.
Yeah, if we could just have a megaphone and walk through the streets and tell specifically first-time buyers to make sure that they don't miss out on this opportunity, because it was not fun having to work with those buyers and see the disappointment that they had when they simply couldn't make the numbers work, when there was that buying frenzy that we had the past couple of years.
Yeah. Tony says, I want to get a land loan for 10 acres. I have great credit and money for a down payment. I notice a bunch of banks don't give those types of loans. Who could I go to for something like that?
Can I read both hands?
John. Yeah.
I love land loans. Land loans and construction loans are my jam. They're so much fun to put together just because it's a process, right? We get to walk somebody through not only buying land, and then, most of the time the intent is to build something either now or in a few years. And we're kind of, that's what we're known for as an organization. We fund an absolute ton of land loans and construction loans. Why? Because our competitors chickened out. Most of them, just like this question said, oh, I don't know, it's just too much, I don't want to mess with it. And we said, why? Why wouldn't you serve this need? This is a great way to promote affordable home ownership, and you can kind of get into it a little bit at a time. And to buy a home and have some room to spread your legs and have a little fun on God's earth, let's do that. That's going to be fun. So yeah, we make that happen.
Yeah. So definitely you can get in contact with John Burchfield, Capital City Home Loans. We'll make sure to put his contact information in the notes of this video and in the comment section of the video as well. This brings up a good question. What areas do you serve?
We serve, obviously our bread and butter is Georgia, right? That's our home. That's where we work. But we're licensed and do a good bit of business throughout the Carolinas, Tennessee, Florida, Alabama, Mississippi, and then into Virginia, Maryland. Am I missing anybody? I think that's it. As of now, but we're always looking for opportunities to get into more areas. But if your viewers are outside of that area, still contact me. We can have a conversation about how the process works, just in general. And I might have someone I know or can reach out within my circle of folks for for someone who is licensed in their area that I, could give a warm referral to and make sure they're well taken care of.
Yeah. Charles says that he tried to buy land last year. The banks won't touch it. So there's a lot of banks that won't do it. And so you have to find a lender that specializes and that has a department that does that, just like John's company, or like he said, he can put you in contact with someone that will. And so it's just getting, in contact with a great professional like myself or like John that can help make that connection for you. But for sure, it can be done and it can be done well. Tim asked, when does the spring selling season typically heat up?
2 weeks ago.
So we are gearing up and easing our way into that right now. Typically on a more seasonal market, you're going to see it really kind of start heating up the last 2 weeks of March, all the way from March, April, May, June. And then, usually people want to, for the most part, be kind of like settled in their home in June because they're planning on having their kids get settled and stuff before school starts in August here in Georgia. So that's usually the consideration and why we see that frenzy kind of during that time period.
I see it spring break. That's in Georgia. Almost all the schools take the week spring break at the same time.
Yeah.
And it's a big deal for that spring break week. People pack off and go places. So they're planning for that weeks in advance, and then they know they're going to be gone that week. So when they get back, I don't know if they sat on the beach and talked about buying and selling a house or what, but when they get back, they're fired up and ready to go. So we usually really have a huge jump off in applications right after that spring break week.
Yeah, and typically most schools here in Georgia have their spring break the first weekend, April, second weekend, April. So that last part of March is really kind of us ramping up and getting ready and seeing a lot more activity pick up in the market. You'll see a lot more houses come on the market then, but then you're also going to see a lot more buyers come out of the woodwork then as well. So sometimes when we're having conversations with sellers about when is the best time to sell your house, and so sometimes you think, oh, well, there's going to be a lot of buyers out in the spring selling season. That's when I should sell my house. But that's also when all your neighbors in the neighborhood are going to sell their house as well. So if you're thinking about selling, the right time to do that or to time it is to get on that early side of the spring market so that you can be the first 1 or 2 houses to go for sale in your neighborhood, and then you have less competition.
Yep.
Another good question here we have, it says, for financing, what's the length of time to be employed to get approved? When relocating, there's usually a gap of employment. How does that work?
There's a lot of moving parts to that question.
Right.
If you're just a standard W-2 employee, I work for an organization and they pay me a salary or an hourly wage, there's really no specific length of time with that organization, with an exception. On some loans, if you've been out of work for the prior 6 months, then we would want you to be back on the job for 6 months to reestablish that consistency. Okay. Now, if you're self-employed or if your compensation is heavily commissioned or bonus or even overtime, then it's oftentimes that we'll need you to be on the position for a year or two, depending on the circumstances, so we can qualify you with all of those resources, all of your compensation package. I think I've answered all of that. Now, we think about that. There's young folks that just got out of high school or just got out of college or just started a trade, and so they're literally entering the workforce for the first time. We can use often their education experience as part of an employment experience. We'll literally put on the application the college they went to or the trade school they went to and how it prepared them for their vocation. And that will build that time frame for us and help us get them into a home.
I think this question is a perfect example of why we suggest and always stress to potential clients to get with a lender way earlier than what you think you need to, because sometimes there's a lot of good background stuff that we can do and to make sure that you're fully prepared for exactly the scenario that you're going to be facing. So if you had plans to make a big move, but you need that 1 year employment or you're heavily commission based, and so you need a little bit more there, we can plan for that. And so it's not just like a complete surprise that just like throws cold water on your plans. I think another cool thing that often comes up too is around credit. So maybe talk a little bit about that and some of the things that you're able to do for buyers whenever you get to connect with them a little bit early in the process.
Yeah, I second your thoughts. If you're thinking of buying a home within the next 6 to 12 months, we need to be having conversations about what is our game plan now, so that we can dot every I, cross every T, and give us every opportunity to get you the best financing package possible. And a huge part of that is credit. Things are very, very dependent upon credit scores, and it moves in tiers. So you can have great credit, be maybe a 738 credit score, right? Well, believe it or not, if you're a 740 plus, you're going to get a little bit less expensive of a mortgage loan than you are a 738. Well, guess what? We can, if you went and used your credit card for a tank of gas a couple of days ago, it could have taken you from a 745 to a 738. People don't realize how much a credit score might move up and down based on just the utilization of a few lines of credit. So we can manipulate those. Given time, we can figure out what you need to do, $200 there, $400 there, and then all of a sudden we're getting a less expensive mortgage because we've been able to rescore that credit to get it over that next tier, over that next bump to the better terms for the mortgage.
And just like with working with a real estate agent, there is no cost to a buyer to have that conversation with you or to go through that process. There's no fees that you charge up front or anything like that when it comes to having a consultation and giving the advice to help someone put them in a position where they're able to buy or to look at all their financials and their situation right now to give them that great advice.
Yeah, all we're looking for is the opportunity to earn their business when they do buy a home, right? The opportunity to have a conversation. So that's all we're asking for. No fees. It's our privilege to do so.
Adrian asked the question, can she or he buy a house in Georgia and still live in New York and pay the mortgage on a monthly basis?
Sure can. And we do it all the time. All the folks in the Northeast want some of our good Georgia real estate, and out west. What we would do is treat that as a second home or a vacation home. And it's become a very popular strategy to purchase a home here. Now, if you intend to put a long-term tenant in it, so you're going to rent it out and do a 12 or 24 month lease to someone, and that's going to be an investment property, be structured a little bit differently, but still doable. But if it's just going to be for your personal enjoyment sometimes, and maybe eventually relocate to Georgia, then second home. Yeah,
definitely. We've helped many people do just that, and it's always fun. We're seeing a lot of people from New York relocate here to Georgia or buy property with the intention that they're going to relocate here. Not only do you get a lot more house for your money, but we have amazing weather compared to what you're used to as well.
Yeah. You're going to love it.
Yes, for sure. Well, John, thank you so much for joining us tonight on the live stream and answering all the great questions. We are going to put your contact information below this video so that as people are watching it, they can reach out to you and talk to you personally and get that one-on-one advice and answer some more of these questions, and so that you can give them some great guidance. I know that the land question, they're definitely going to reach out to you, they said. So that's awesome. So
I'm excited. Thank you so much for having me. It was really a lot of fun.
Yeah, definitely appreciate it. And you will see me back here next Wednesday answering more questions about moving to Georgia. And of course, if you're thinking about making a move, you need to reach out to me. My contact information is below this video. We talk to people day in and day out, helping you relocate here to the area. And I look forward to seeing you next week on the live stream.